Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, November 3rd, 2020. I think it's a good time to do an update. I did post in the comments section below today's earlier post an update a few minutes ago, and I just wanted to point out right now, I'm going to zoom in a little bit. We've now hit that price channel, and there it is. You have the 11,350.93 resistance just above it, so yeah, I'd mentioned in that post, I posted a chart saying good time to book profits. You know, it's been a 3.5% pop since then off yesterday's lows. That's where during the video, towards the end of the video, about the 17 and a half minute mark, that's where I stated, I made the same call I did the previous day. I think that was it, the end of the pullback, and made that call there yesterday, and that's what happened. So what we did, again, to reiterate, we put in a divergent low, slight marginal new low, pretty much hit that same support level, about 10,941. So it's wash, rinse, repeat. It's been a, despite the elections, the markets are trading well to the technicals. And we went up, and again, remember, we had already a couple tags of the midpoint of that channel there, several. So that's why this morning, looking for a break above that level, because you'd already been checked on it several times, put in that divergent low, and again, this opens a door for considerable more upside. Again, elections can foil everything. I have to keep saying that because that's just how it goes. But right now, the near-term outlook for the charts with these 60-minute divergences and the price action is constructive. So there we are. Just kind of recap. If you were able to go long yesterday at that, or even on the breakout today above the midpoint of the channel, I said that would be our next objective long entry. Here's your midpoint right there. 3.5% or so rise, and right into resistance, dual resistance, both the downtrend line as well as the 11,350-ish resistance level there. So I can think of no better time to book profits if you're an active trader and you've been just swinging these levels, and or reverse to a short for a pullback. Now I think the pullback probably be relatively minor, again, because the backdrop here is these recent divergences that were put in place. Let me make that line. That line goes up to here. We had divergent low right there, and that was the extension right here, that marginal new low yesterday. So that's it. I mean, we almost hit that both those levels to the button. Elections coming up today. It is election day. Again, we probably won't have any results today, but you have to imagine there'll be some profit taking, and if nothing else, it's a technical level. Let's just say that. And the way it works, if you're an active trader, you close your longs here, you reverse to a short. Pullback target would be, if you're just looking for a quick pullback trade, 11,228. Maybe cover just a hair above that would probably make sense, and stop somewhat above. Somewhat means, on a solid pop. I'd want to see a solid 60-minute candlestick close up above that 11,350-ish level there, and the downtrend line. And even if it happened right now, we'd be pretty darn stretched, at least in the very near term. And you probably come in and back test that trend line or the 11,350 level if we are going higher. So just want to say, kind of bigger picture, you step back and a breakout of the channel would be your next objective long entry or buy trigger. But when you have a reversal in a pretty sharp move, a 3.5% rally with very little give back along the way, tells you're getting a little bit stretched, and that's why that's why I favor booking profits there and maybe reversing short for a pullback trade into the close today, and then maybe go home flat, with it being the election, something like that. And we'll pick it up here. Let's just move on to QQQ. There's also our downtrend line on the 60-minute chart of QQQ. Remember, it came in a little bit tighter on NQ. We already hit it there, and we're just a hair below it on QQQ. So again, that would mesh with just maybe a little slight overshoot of those resistance levels I just covered on NQ. But the fact that we're at resistance on NQ, I wouldn't hold out for. It's not worth it. It's a fraction of percent. And then above that, you have a pretty big resistance level of 278. So I'll just end it here. My convictions are pretty high that we're just like yesterday I said, I think that was the end of the run the pullback yesterday, as I said it the day before there. I think this is the end of the run for this rally for the time being, with a pullback to come. So active traders might use that information, and swing traders may just want to wait till the elections are out of the way and let the dust settle and see which way the charts go. A couple other things to note. And that would be ES. This is the 60-minute chart. In yesterday's video, we were back testing. We had put in a divergent low, just like we put in a divergent low here, and that was a catalyst for this rally. There was your breakout right there, rally, and we put in that divergent low, broke out, hit that 333.17, 50-ish resistance, pulled back tested, and that's where we're at in the video, and that was the objective long entry there on ES, the back test. And again, a nice move up, probably comparable to that 3.5% run, a little less. NQ usually moves more. It's a higher beta index, fewer holdings, more high growth tech stocks. You tend to get a little more bang for your buck trading the NQs. But there it is in ES, and you can see coming up to resistance. And then for your SPY traders, SPY, and we're still all these are 60-minute time frames I'm going over. Pretty good resistance. What I did, since the charts I posted this morning, added one line to get the bottom of this gap. That is the gap that was Tuesday, October 27th, so it was Wednesday's gap down, and where we closed that previous day was at 337.99, and that's this line right here. And that's what I added since this morning's video. We'll color it up here. We'll color it yellow. You can see it real well, and that's brick wall right there. We ran into it, so there's a gap backfill. And again, this is just one more checkbox, one more reason to close longs and reverse to a short if you're an active trader. Quite a bit of resistance that we've run into right now. So let's leave it there, and let's take a look at a few other things. I've cut back on the updates on coffee and natural gas, some of the other things I was watching. Coffee's still doing the same thing. It's just, kind of a failure to launch so far. Still has that nice big divergence and the potential to really run. Just needs that catalyst to get going. So we're right there, pretty much holding the recent lows, and need to rally and pop that. I think we need to pop that 108.60 level to get going here and hit any or all of these targets and get the next leg up in coffee. So the bullish setup is still there, the potential's there, and now we can maybe even put a smaller downtrend line. There we go. Yeah, let's watch this one. I think that'll do the trick as well. Pop above there should bring us up to that 108.60, and then a pop above there should carry us higher. Nat gas was going, put in a divergent high recently. Let me see if I can find that chart on the 60-minute time frame. Here it is. So we finally took out that trend line. Like I said, we had a trend line here that we were walking up, and said a break of that trend line would be, an objective level to have a stop loss order below. The whole catalyst for the move up was this bullish falling wedge, divergent low, bullish divergence, breakout, back test, and been walking up the trend line. Got very close to that 436 target, put in this divergent high right here. And that's it. Divergent high was the catalyst for the reversal. But then, we had been building the divergence and the trend was up. But this is what happened. We took out both the trend line right there, the uptrend line, as well as that 3.195 former target that was hit there. It was a resistance. Resistance, once broken, becomes support. Tap, 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 numerous things. And then once that went. So that was a clear breakdown there of both dual support levels, and so that's it. So that puts natural gas right now on a a sell signal since we broke down there. And if it kicks back, 3.195 should be resistance. Maybe we come back test the trend line, but I don't have any really strong convictions on the near term. Like I said, any stops should have been hit already on that one, and would have protected a lot of the profits on this run up. Okay, we're going to keep this video short. We'll just do a quick update on gold. Somebody asked about that on the homepage. Now, in my last update on gold, it might have been a week or so, maybe even a little more than that. I said, the recent trend, we pointed out way back here this divergent high and developments on the long-term charts, the gold running into resistance, silver running into resistance, and the euro US dollar pair running into resistance as well. All three of that put high probability that we'd have a correction, and that's what we've had so far. And it's been multi-month now. It's been all the way back since early August, and gold's been correcting. Now, it's been correcting mostly in time. There was certainly a correction in price, at least initially, big drop. We did make a lower low there. So far, we're making a higher low. So here's what I'm looking at now. This is not a 60-minute. This is a 120-minute chart, 2-hour bars. And so what I'm looking at, what just happened? I flipped over to another chart. Pardon me. Let's go back to gold. Okay, so on this 120-minute chart, here's a downtrend line to watch, fairly well defined. And bullish if we break that. Now, more importantly, I'm going to flip over to the euro US dollar pair, and what I was looking at here, and I've been talking about for quite a while, this is a long-term downtrend line. So when you're looking at this chart, it's the euro against the dollar. So when this chart is rising and going up, the euro is rallying against the dollar. The dollar and gold have an inverse correlation. Dollar up typically means gold down, and vice versa. Dollar down means gold up. So when we're looking at this means gold's going to move in line with this, because gold tends to go up. When the euro's going up, the dollar's going down. The euro is the biggest component of the dollar index. So I like to watch this chart as a proxy. You can also watch DXY, USD, the US dollar index. But that's it. So all the way back to, when was it? September or whatever, just August, I think. We hit this level, and it's a big level. It's a big downtrend line on the euro US dollar, and I'm ultimately bullish on this. That means I'm bullish on the euro against the dollar. I think the dollar will continue to fall, and once we get this breakout, we've been consolidating here for a while. We'll zoom in a little tighter. I mean, these are weekly candles. So with that candle hit at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks so far of consolidation. So say what you will about technical analysis, but I think you find it hard to argue that's not a significant level. And like I said, it checked the rally back then as expected. It was a strong rally in the euro. Dollar was falling, euro was rallying. And so it's no coincidence. This is exactly what gold looks like over that time frame. There's that same correction I just showed you in gold on a shorter term time frame. So that's it, guys. It's that simple. I don't know when this breaks out. Probably my guess is after the election. I think what'll happen is we'll get our next big round of stimulus, and like always, who's going to pay for it? Somebody's got to pay for it, and it's not good for the dollar. So that will probably be the next catalyst. The only thing that could stall this or even prevent that breakout, if the ECB comes in and they do more stimulus. It's been the race to the bottom for a long time, is what they say about the currencies. They just, the U.S. can debase our dollar by printing more money, bailouts, quantitative easing, all that good stuff, which is net bearish for the dollar. But if the ECB is doing as much or more, Bank of Japan is doing the same thing with the yen. The yen's the second largest component in the dollar index. Well, that helps the dollar. So remember, everything's all relative. So in a vacuum, if we were printing money like crazy and the ECB wasn't, then yeah, the dollar is going to sink. But so that's it. Now let's keep it pretty simple. Again, you don't have to worry about who's printing more or what's going on over there, what's going on over here. Let the technicals be your guide. So that's it. And I've been saying it for many weeks now. You're going to get chopped to pieces in gold. I haven't posted a lot of updates because it's been a very choppy, erratic trade. Go back to that chart I had there. GC, there it is. This is a 120 minute, but before I was showing you a 60-minute chart, and we'll do that here. And it's just been a chop fest. These are my trend lines. We go through them. We had a little triangle. We popped the top of the triangle, proved to be a whipsaw signal. Then we pop below the triangle, back test it. We move lower. So again, sloppy trading, better fish to fry in my opinion. Like I just showed you in the start of the video, the NQs hey, the elections are coming up, and we've seen some whipsaws there, no doubt about it, but much better trading vehicle. I'm looking long term on the on gold, and and silver will most likely follow. Silver has a higher industrial component to it. Gold's more of the flight to safety asset. So there's my thoughts on gold. You won't see a lot of updates. If you ask, I'll be glad to share my thoughts. I just don't see a lot on the near-term charts that tell me the direction, other than, again, just to loop back to this 120-minute chart. This downtrend line here looks pretty significant. So if gold can pop that, these are GC gold futures. And I do know, like on this video, I've stuck with the futures mostly, and I know a lot of you don't trade futures. So we can look at it here and probably give you a comparable downtrend line. Let's see, this is the one I had on gold. I'm going to tweak it a little bit to try to align with that GC. There it is. So something along these lines. You see it doesn't fit as well. The futures I prefer to use in charting, but if you want to try to replicate that on gold, maybe go with something like this trend line here, and you can see there's some gaps and some levels to trade on GLD. This is a 60-minute chart. You can go to a 2-hour chart, and it's going to look very similar there. Okay, we're going to wrap it up here. 15-minute, well, 16-minute video. That's it. I'm just started looping back to NQ, which I started with. There's our reaction so far. Tried to circle that. You can see a little red candle there. Here, I'll zoom in for you. Pretty much hit that trend line slash 11,350-ish resistance level, and there's the reversal so far with pullback most likely coming down to about that 11, we'll call it 11,230 or so level, and I think that'll probably be hit before the close with a little profit taking, being that it's election day. All right, we'll wrap it up here and follow up with I want to revisit commodities. I'm going to study those a little further, as well as oil. I mentioned the energy sector starting to look attractive the other day, I think in yesterday's video. So I'll follow up with some additional analysis on energy sector as well as commodities soon. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.